In this presentation, we will add a new checking account and the beginning balance to our business account within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are on the home page. We currently have the open windows open. In order to open the open windows, you go to the view drop down and select the open windows list. We're now going to go to our chart of accounts by going to the lists drop down up top and taking a look at the chart of accounts. The chart of accounts has been generated for us by the fact that we chose an industry. So we have this nice chart of accounts. Note the order of the chart of accounts. This will be important when we create our new accounts. So most of the new accounts we create are usually going to be expense type accounts. But note that it's in order of assets, liabilities, equity, income, and expense, and more specifically in order of type of assets, meaning more liquid assets like cash and whatnot, which aren't here yet. We don't have any. And then fixed assets, and then other current liabilities, then equity, then income or revenue, and then expenses starting with cost of goods sold. What we will do now is add a checking account and the beginning balance for it. So we're going to add this as of the beginning of a year, and we're going to say it's in the year 2020. We're just going to add the checking account as we would when setting up a new file. If possible, it's nice to start at the beginning of the year to do a full year. If not, then we start whenever we can start. And note that we often have something in the checking account prior to that. And so what we want to do is put that beginning balance in place. We're not going to worry about doing all the books that we've ever had in the past. We're going to draw a line now, put the balance in now, start drawing and doing the books from here forward. If we have questions about the bookkeeping prior to us doing this QuickBooks file, then we're going to have to go into whatever system we had prior to this. So we need to decide when do we want to start, when do we want to start entering data and being more organized, and when can we accept the fact that we have prior unorganized stuff or stuff that's in a different system prior to that point in time. Our point in time, our cutoff will be January 1st, 2020. We got our bank statement here. It's going to be our mock bank statement for the first month. And you can see we have a beginning balance. We chose an arbitrary number of 1,000. That's where we need to start. So we need to put that beginning balance in the system. Couple ways to do that. I'm going to close this back out. We're going to make a new account. And we'll do that by going to the account drop up at the bottom. It's got like a drop down arrow, but it goes up. So it's kind of like a drop up. And then we'll say a new account, new account. It's going to be a bank type of account. We're going to set up a bank type account and continue. And then I'm just going to call it the checking account. So we'll just call it checking account. Now, in practice, you might not want to put the bank name clearly there or something, and maybe even like the last 4 digits of the bank number, especially if you have more than one account. But if you only have one checking account, then it's pretty clear what that checking account is. If you have multiple checking accounts or other kind of loan documents or whatnot, or like multiple credit cards, then sometimes the differentiation is easy to see with like the last 4 digits of the number if they're in the same institution. We're not going to put a description. We're not going to put a bank number. We're not going to worry about any of this stuff here. We could, however, put the opening balance in if we wanted to, which was that $1,000. I'm not going to put it here, however, because if I do, that's basically telling QuickBooks that QuickBooks is going to force a journal entry, and I don't know where the other side of the journal entry is going to go. QuickBooks is just going to do whatever it needs to do to be in balance. And so I would rather consciously put this beginning balance in if I can. If I don't understand what the journal entry is going to be, then I would use the opening balance, and you'll notice QuickBooks will make up accounts. It'll call it probably opening balance equity or other revenue, uncategorized revenue. I want to skip that added step of QuickBooks making some funny account and just put it in manually, and I'll show you how to do that. So we're going to say save and close. And we're set up online service. I'm not going to do that. And then here's our checking account. Now we could go into this checking account. We need to put that $1,000 in place. So the way I would do that is to go into the check register and put it in there just as we would any other kind of transaction within the check register. One way to get to the check register is just to double click on it. So now that we've set up this account, we'll just double click on it like so. And then here's our account. Now we're going to start entering data for the year 2020. I'm not sure why we picked that year, but January 2020, that's what we're going to do. So what I want to do is put any kind of messiness behind us before that date. And so the messiness is going to be in there the day before we set up the new account. In other words, I don't want to have revenue on the books for $1,000. I want it to just be 1,000 on the balance sheet. So I'm going to put it on there as of the day before January of the year we're going to start entering data, which is 12/31/19. And it's not a check. I don't really need anything in the type. And there's no really account here. It's going to be a deposit. So we're going to say it's a deposit even though we're not actually depositing money. It's already in there. That's the beginning balance. We just need to put the beginning balance in place. So I'm going to put 1,000 in the deposit. And then here's the question. Here's the other side. Here's the side that QuickBooks would have just populated for us if we hadn't done it this way. So we need to choose another side. And where do we want to put it? Typically, you want to put it in some type of equity account. So because this is going to be, we're assuming it's revenue that was generated over time and would roll into equity if it was in the income statement or wherever. So we can put it into the owner's equity account. That's where we would ultimately want it to go usually. And then we could just set, put a memo, set up beginning balance, something like that. And then make sure to record it. You should hear a beep once it records. It's 30 days in the future for me. That's okay. And it's going to say that, hey, you're doing something. I'm paraphrasing here. It's going to say, you're doing something to the retained earnings account. Do you really want to do that? And we want to because it's an equity type account in this case. Typically, we don't do stuff to the equity accounts. But in this case, we do. And so we're going to say, okay. And there it is. So now let's take a look at our financial statements and see what happened. We're going to go to the reports drop down. We're going to go to the company and financial. We'll take a look at the balance sheet. And we're going to take a look at the balance sheet. I'm going to change the customized reports up top. Changing the dates from 01/01/19 to 12/31/1. Let's make it 19. And say okay. And you can see here, here's our checking account. And here's our equity that we have set up. If we double click on the checking account, then we're going to see the detail. Here's the detail that we entered. If we double click on that, we get this transfer item here. It should be a transfer or a deposit type of item that it sets up. But this is the kind of form that's going to be set up to enter this data. So I'm going to close this back out, and we'll see the other side on the owner's equity. Same detail. And there's our information. So, and this is generated even though we put it into the check register. You might be saying, hey, I put this into the check register. What's this transfer funds for? And the QuickBooks will generate either a deposit or something like a transfer funds, some type of form. Typically, with most transactions, QuickBooks will try to set up a form to drive it, even though we entered it in some other fashion, in this case in the check register. So we'll close this back out, Now this is the year before the year we want to work in. So if we then go to customize reports, and we're going to be working in 2020, 01/01/20 to 12/31/20. So January through December 2020, that's when we're going to enter the data into for. And if we say, okay, same data here. Why? Because they're balance sheet accounts. They don't go away. But if we go into it, we're not going to see the detail because it's just the beginning balance. So now we have a beginning balance that's been entered. We can move forward. Now you might be saying, what happens when we reconcile, when we put that beginning balance in there? We'll see that it may not show up in the reconciliation. Let's just take a look at that real quick. We'll go to the banking drop down and we'll go into reconcile. And you'll see it's not showing up in the beginning balance here for that first reconciliation. And that's okay because it's something we'll have to set up for the first time period, and then it'll be okay going forward. What we'll do is when we continue with our bank reconciliation, we're going to enter 3853. We're going to enter 3853. And we're going to have to check that deposit off as if it cleared this time, which it didn't. That's really the beginning balance. So it'll be a bit, funny looking on that first bank reconciliation, but once done, it won't be a problem going forward. So that's the one little glitch of not using that beginning balance item. The benefit is that we don't end up over here. Sorry, I just went to the balance sheet again in the open windows. We don't end up over here with this beginning balance kind of account that's not real, that we don't really want, and then have to adjust that account. So that's what we're trying to avoid by doing the register rather than using QuickBooks beginning balance field as we set up the checking account. For more accounting information and accounting courses, visit our website at accountinginstruction.info.